All right, guys, welcome to the first monthly update of 2024. Obviously, we've got Landon McKernan here, recent partner at Levrose, so congrats to Landon.
Thank you.
Yeah, of course, you're welcome. Well deserved. We're going to go over a few things today, a 2023 recap, industrial overview, recent trades, what we're seeing in the market, as well as a few other things. But going over that 2023 recap, and the Phoenix industrial market overview. So we've got record supply waves, which is causing a lot of dislocation. Got about 23 million square feet delivered in the second half of 2023, and it actually surpasses that 2017 to 2019 total as well. We did see vacancy spike from a low 4% in 23 Q2, and that actually went to 8.6% as well. So it's pretty substantial as well with that speculation.
Yeah, so good point on vacancy really coming up this year to 8%. Luckily, we're in a good market, unlike some other markets out there that are struggling to backfill a lot of these spaces that are coming to market. There's still a lot of companies coming over from California, from other states where things are more expensive, where it's not as easy to do business, and they're looking to come here because you're an only 8-hour drive from California from about 30 million people. And so still seeing a lot of groups coming over. We've got a strong labor force and a really good positive long-term outlook with our economics. In 2023, we did see just under 14 million square feet absorbed, ranking fourth in the country overall, driven by logistics, manufacturing, food and beverage, and construction industries.
Interesting. So furthermore on that supply pipeline as well, and then obviously that impacting vacancy. So we're seeing an increase with 45 million square feet currently underway. Obviously 10% of the existing inventory here in Metro Phoenix. Another thing is that 2/3 of the space available for lease is added to about 20 million square feet in 2023 as well. Obviously, the prime development targets that we know are along the Loop 303 corridor and over by Phoenix Mesa Gateway as well.
Yeah. And a lot of people are starting to ask us what's our future outlook, what's going to happen with all this product coming to market, what do we expect to see on rents?
What's your crystal ball saying?
That's the $1 million question.
Yeah.
Everyone asks, but no one knows the answer. But we can do our best to guess. So I think what we're going to start to see is a little bit of easing of supply pressure in early 2025.
Yeah.
Mainly because development slowed down over the past 12 months, and I think will remain pretty steady this year, just with interest rates being elevated, prices still being high, and people pushing off some of the plans just because a lot of the deals aren't necessarily penciling. But with that being said, what we can expect is in the next year or so, rent growth to start to stabilize. They're expecting about 10% asking rent growth in 2024, which is a lot healthier level than what we've seen over the past 24 months or so. I know last year was over 30%.
Yeah.
Really not a healthy level for tenants that are renewing. And
It's not sustainable for a lot of these small businesses too, so
yeah,
it doesn't make a whole lot of sense.
all the tenants we're talking to are having sticker shock.
Yeah.
They're at less than $1 a square foot, and their lease is coming due and pretty much doubling.
Yeah.
And a lot of the businesses just can't support it. So if you're a tenant out there, you're probably looking to renew your lease, knock it out there into the market, and hopefully get a better deal.
Yeah, and then furthermore on rent growth and those dynamics as well. So owners of smaller properties, and what we mean by smaller properties is 50,000 square feet or less, they're obviously going to retain that leverage due to the limited supply of new construction for smaller product. A lot of the new construction is, I would say, 100,000 square feet plus. So obviously larger distribution facilities that are in that size range of 100,000 square feet or more is going to see a pretty significant impact. And obviously, as Landon said, 2025, 2026 is where we're going to start to see a little bit more of a rebound from our expectations, of course. So, yeah.
Exactly.
Next up, we've actually got recent trades here in January. So first three that I'll go over. First one's actually in Tempe off of 5th Street. It's about 8,500 square feet. Was built in 1996. Sold for just over $1 million at about $227 a square foot. Property was block construction, EVAP, and HVAC in the warehouse as well. 16-foot clear height, sprinklered, grade level doors, and everything else. So pretty good comp as well for a lot of those owners in Tempe on the smaller side. Next one we've got is in the Avenues on 27th Ave in Phoenix. It's 2016 North 27th Ave. It's about 11,000 square feet and sold for a lot lower on a price per square foot basis than Tempe at about $125 a square foot. Had about 3,600 office. The remaining was warehouse. There was a canopy included as well. And it's A1 zoning too, which is a very flexible zoning, especially in Phoenix where this property is located. The next one is also in the Avenues off of 36th Ave, 3700, my apologies, North 36th Ave in Phoenix. It's about 31,000 square feet and was built in 1992 and was actually recently renovated in 2014. So this one actually sold for about 105 a square foot. It was block construction, EVAP cooled, and has about 16-foot clear height in the warehouse as well. Landon has the next ones.
Yeah, I'm going to be going over a trade that just happened south of Sky Harbor. It's 2912 East Wood Street. A lot of people are really looking for this area right now, mainly due to the central location, freeway access, and it works well for their employees that are scattered around the valley. So this one's just over 10,000 square feet, built in 99, traded for $2.5 million or $240 a square foot. Property had minimal office, about 3,000 square feet, and about 7,500 square feet of warehouse. Zoned A1, again, pretty flexible zoning, and had 800 amps of power and 18-foot clear height. Pretty good clear height for a building of that size.
Yeah, exactly. It's solid.
Another trade was at 5670 South 32nd Street in Phoenix. So, again, in that pocket just south of Sky Harbor. This one was quite a bit bigger at 155,000 square feet, freestanding industrial building, built in 2015. It was a newer build, sold for $19.2 million or $123 a square foot. It's concrete tilt-up construction, 2,500 amps of power, and a little over 30 feet of clear height with 2 drive-ins and 37 dock height doors. More of a distribution style building.
Yeah, it's solid.
Last one was at 738 West Boeing Drive in Casa Grande. This one was just over 11,000 square feet of warehouse, built in 2006. Traded for $3.25 million or $290 a square foot, and was metal construction, had a grid level drive-in door, and zoned I-1. It's not too often we see a building sell over in Casa Grande. It's not nearly as much inventory out there. But.
And especially at that price per foot and it being a metal building, I mean, usually you're seeing those deals trade in the hundreds per square foot. So definitely interesting.
Yeah. So that's going to be it for our weekly trades.
Awesome. Next one we want to go over is the transaction activity that we're seeing for 2024. What direction are we seeing the market going as well? So where we're at currently is most likely between the deterioration or bottoming out of the market as well. Obviously, we're seeing underwriting come back to normal levels, which is actually good to see, and starting to see pricing adjust in certain aspects of the industrial market, more so on the larger deals, I'd say. The smaller ones, not so much, mainly because you've got smaller users that would prefer to own their building as opposed to rent. So that's something that we might see play out in the future. And then obviously with maturing debt, that is going to be really interesting to see a lot of those loans that were done pre-COVID and during COVID that might be coming up this year and next year as well.
All right, Mark, a lot of people out there right now are asking what's going to happen in 2024. Where are we currently at in the market, and where do you think things are going?
Great question. Crystal ball. We'll see. So where we're at currently, I would say, is between the market deteriorating, also potentially bottoming out. So we're seeing underwriting come back to more traditional analysis, not as much speculation. It's more realistic. for where we're at in the market as well. And we're also starting to see pricing adjust, not so much on the smaller deals, but more so on the larger deals. We're not seeing a ton of distressed sales currently, but obviously with maturing debt, that might come into play in the future as well. Obviously, a lot of those loans were taken out in 2019 and also 2020 during COVID. So over the next couple of years, that is going to be something that will be on a lot of people's horizons as well. So that is something to consider.
Yeah. What are you seeing right now in terms of owner users versus investors? Who's sitting on the sidelines versus who's looking?
Yeah, owner users under, let's call it 30,000 square feet are still active, maybe even 20,000 square feet. If you're an investor, you're really looking for the right deal. You want something that's going to pencil, rents that are sustainable, and something that's pretty realistic as well.
Yeah, I agree. It's kind of a mixed bag between half the investors out there that have decided to put their pencils down, wait things out, and see how the market adjusts. And then the other half that are still actively looking. They might not be finding a lot of deals, but they're still looking every day, trying to find something that makes sense.
Okay. Yeah.
And it's probably going to take some time. I've noticed that a lot of those investors are being a lot more conservative. They're not expecting rent growth to be 10, 20, 30% over the next few years. If anything, they're expecting things to be flat and just taking a really conservative approach.
Yeah, I agree. It's a very conservative outlook for a lot of the groups that we're talking to, and they really don't want to waste anyone's time if it's going to be an unrealistic expectation with numbers as well. So
I agree.
Yeah.
Yeah, and I've noticed a lot of those investor groups are looking for opportunities as far as financing.
Yep.
With rates still being high, and owners having a lot of equity in their property. They're asking who's willing to do seller financing, where can they get a good rate, and to make sure that they're cash flowing positive.
I feel like we get asked that question at least once a day if a seller will do a seller carry on one of our listings. So it comes up pretty frequently. So yeah, it is a good way.
Yeah.
Also to help with capital gains and spreading that out too. But I guess, what are you seeing for recent articles? I know CoStar put something out regarding obviously the inflation and curbing that, and then that as well.
Yeah, well, that's really what leads us into more people having optimism about 2024 and expecting more deals to get done, more transactions to get across the finish line. Is we're starting to see inflation taming down closer to the 3% annual level. It was only up 0.3% in December, so that's a 3.6% annual increase over the year prior, and 0.1% in November. And so because of that, people are thinking that the Fed's going to start lowering rates early in the year. Whether that happens or not, I'm not sure.
Yeah.
But I think a lot of people are optimistic, hoping that they can get back in the game.
Yeah, exactly. I mean, it'll be interesting that is the Fed's silver bullet, essentially. And, do we risk going into hyperinflation? That's the model that always plays out as well in people's minds, especially with underwriting things. The other interesting thing that, just the takeaways from that article is goods and services and those price trends. So we saw gasoline, used cars, household furnishings actually easing up on pricing, which is great. Housing costs did play a significant factor, and that actually did rise a little bit in December. The rent component of CPI was about 6.5% higher than a year ago as well. We are seeing a discrepancy between actual home prices and listed rents too. The expectation of rent and that component towards CPI might be a little bit overstated as well. So something to consider as you're looking through those numbers.
Yeah. Also, with the cost of borrowing being so high, a lot of consumers' ability to maintain their spending is started to slow down, which I think is starting to ease inflation as well.
I agree.
So people are spending less than they were last year. I know a lot of the business owners I'm talking to had some of their best years in 2021, 2022. And last year, while it wasn't bad, it just wasn't the same levels at all.
Yeah, that definitely makes sense. Another article that something we did want to highlight is just the Fed and interest rate cuts as well. So with market expectations, something to look at is we've got a discrepancy between private sector and obviously showing a little bit slower rent growth and government inflation data being a little bit different. So that is something to consider as you're looking through these numbers.
So as you're touching on, CoStar actually came out with a report and a graph showing the inflation versus wage growth from 2021 through last month. And it's really changed a lot. So in 2022, obviously inflation was peaking close to 8 and 9%.
Yeah.
Wage growth really didn't change that much, and that was a big concern of a lot of people. How is everyone going to afford the increased prices if they're not really making much more? And something I thought was interesting was last month in December, wage growth was up 4.1% versus inflation was only up 3.3%.
Yeah.
Which really shows that inflation's come down quite a bit and the labor market's still strong. All right, that's going to be it for this week's videos. Thanks for tuning in. We're going to keep you up to date with how things are shaking out in 2024. Looking forward to it. See you next time.
See you next time.